Welcome, welcome, welcome in, everyone. Thank you so much for spending time again today with us at Care Patrol Tuesdays and Thursdays with Care Patrol. We so much enjoy these hours that we spend together, and we're so pleased to be able to present so many people of knowledge to you in different areas that are either legal or financial or social or otherwise, and look for a continuance of having other folks also present in addition to me, because I enjoy presenting on a monthly basis. And in June we'll have an entirely all ethics month, so every presentation in June will be on ethics, and one of them I'm excited about will be a presentation that is on self-care for the social worker, and it's given to us by a doctoral candidate in social work, and I'm very excited about that. And I know that all of you as social workers will be excited about that, because that's now necessary for your licensure, as you know. So we're pleased about that. But today we have a great piece of information about reverse mortgages. Gentlemen I've known for really since I started doing this 10, 12 years ago, I guess now 12 years ago. I met David Karcher and have stayed in touch, and I've done so for a reason, which is I like to collect people. I always have. I love to collect people who are smarter than me, or who have greater experience than me, or better insight, or whatever their talent may be. I love having people in my life that enrich it. And David Karcher, who's presenting to us today, is one of those people. David is someone that I've found to be, without blemish in terms of his character and ethics. And that's so important when we're talking about things like money and financial issues. And I think you'll get that sense from David as he speaks further to us today about his ethics, as well as about the information at hand. And I'm excited to learn more, and I hope you are, about reverse mortgages. As you know, we have some housekeeping to do before we get started. I've placed in the chat room at the base of it our link for today's Survey Monkey evaluation. Those of you who've been with us before know that in order to receive your certificate, you must complete the survey. The survey is through a link to a website called Survey Monkey. And this is how we evaluate you. This is how we collect your information and award you the hour. That link I will give you all who are by phone or otherwise unable to see the chat room. The Survey Monkey link for today's evaluation, which is necessary to get your certificate. The link is https://www.surveymonkey.com/r/all uppercase Z as in zoo, 78 C as in cat, 5 H 9. And I'll give this one more time for y'all who may have been grabbing a pen. If you are looking to get the survey link for Survey Monkey, which is necessary to get your certificate, that link is https://www.surveymonkey.com/r/all uppercase Z as in zoo, 7 8 C as in cat, 5 H 9. Now, this evaluation on Survey Monkey is password protected. We'll give a password later in the presentation that relates to today so that we know that you paid attention and we're here, and we'll go from there. So some of you, I think, from looking at names are new. Many of you have been with us before and you know the drill. So we do SurveyMonkey. We're accredited by the Board of Social Work of Alabama, as well as by the Alabama Board of Nursing, to supply hours for these teachings. 1 hour for social work and 1.2 for nursing. These will be certificates that are digital, that are Word documents. You can add your name to them. You'll get it upon completion of the survey. And by the way, I've got to leave town right after today's Zoom. So it will be tomorrow before you get your certificate. So please don't panic. You will get your certificate, but it will be tomorrow, not today. So that being said, I think we've sort of gotten our housekeeping out of the way. I'll introduce David Karcher, who is a banker of some years and leads a team of folks that do mortgage lending, specifically reverse mortgages. So David, please enlighten us on your expertise.
All right. Well, thank you. Thank you for having me. Everybody that's on the call, I appreciate your opportunity to let me speak to you today. When Sean reached out to me, he asked me, hey, you do presentations? And I was like, absolutely. And so he asked me to prepare something. So, here we go and that's what we're going to talk about today. So reverse mortgages, financial solutions for seniors to age in place. I think it's a big topic that doesn't get talked about enough. And so hopefully after today, we'll maybe all walk out with a little bit more education and be armed to see if this is a good fit for some of our clients. One of the, let me see here. I might click this slide here. Here we go. So next slide. Who is David Karcher? I always like to give a little introduction as to who I am. Been living in Alabama since 1992, but I was born and raised in Ohio. So, go Bucks. It's hard to be a Buckeye fan in the middle of Crimson Tide country. Let me tell you, I married a girl who's an Auburn fan. So I guess we pull for Auburn and of course the Buckeyes. Graduated from a little university in Indiana named Taylor University. You may or may not be familiar with that, but got a BS in history. So actually it was a history major. And it wasn't until about the middle of my junior year when I realized, hey, I have no desire to be a teacher. Turns out I'm still a teacher. I'm just teaching financial solutions and products. Go figure. Been married to my wife, Lee, for 27 years. I have 3 daughters, Danny, Samantha, and Caitlin. I also now have a son-in-law. And in the last year became papa to a grandson named Simon. Been in the mortgage business 24 years. And so the last 12 years, I have done nothing but reverse mortgages. So I feel like in the last 12 years, I have really have a good grip on a product that can change the lives of our senior clients. I personally am licensed in 41 states. We are lending all over the country. And I'm doing all of that right here in Birmingham, Alabama. And so we get those questions all the time. Can you help my mother in Florida? Can you help my grandmother in Georgia? Absolutely. We're all over the country. One of my hobbies, if you want to know what I like to do on when I'm not working, trying to be an aspiring pit master. So if you ask me what I smoked on the weekend, I've always got something that I'm trying to smoke or perfect, whether it's chicken, whether it's pork, whether it's beef. I'm always working on something, right? So anyways, there's a picture of my crew. We call ourselves the Karcher crew. My 3 daughters, my wife in the middle, and my son-in-law in the back. The blonde in the front on the right and the one in the green shirt, they're twins. So I have a 24-year-old and 21-year-old twins. So y'all pray for me. And there, of course, is Papa's little man, Simon, right? That's our first grandchild, and he has captured our hearts. And everybody has always said being a grandparent is awesome. Well, I can concur. So, right. All right. So the question I get asked all the time, why reverse? Why reverse mortgages, right? 24 years in the industry. Why reverse mortgages? And the short answer I tell everybody is the Great Recession of 2008. If any of you were alive and during that time, we had what was known as the Great Mortgage Meltdown, right? I was 10 years into my mortgage career at that point, and the whole world came unglued, right? There was a credit crisis, there were appraisal crises, there was foreclosures, everything that could have happened. When it did happen, it was a perfect storm and everything melted down. We went from having lots of programs and lots of products to no programs and no products. And I saw my income dry up, quite frankly, right? So at the end of the day, I was looking for another way to provide for my family. And a friend of mine reached out to me and said, hey, you're still in the mortgage business. You still have contacts. I'm hiring reverse loan officers. And I thought, reverse mortgages, right? At the end of the day, somebody's getting taken advantage of, right? That was the mindset I had. You know what? It happens to be the mindset that just about everybody that I talk to has. And so I sat down, we had about a 3-hour conversation, and I left that conversation with a new understanding about what reverse was. And I was humbled. And I thought to myself, if I, as a 12-year mortgage veteran, didn't understand what the product was, how many others don't understand it either? And what I realized in that moment was there was my opportunity. There was my opportunity to stay in this business that I loved and do something differently, but in a manner that really made an impact on seniors' lives, right? So that's why I got into reverse. And that's why 12 years later, I'm still in reverse and I love every minute of it. I don't think we can talk about seniors until we understand their situation. And I think that most of the people that are listening to this are probably have a lot of interactions with seniors. And so some of this will hit home. But did you know, and this is from January, PR Newswire, that senior home equity is now in excess of $10 trillion. That means they're sitting on homes that are either paid for or paid way down. And obviously we all look around and we've seen what has happened in the real estate market with these crazy real estate values and what people are having to do to buy houses. The values of our seniors' homes have gone up as well. So they're sitting on tons of equity. From that same article, I pulled that quote out there. I thought it was really interesting. One of the biggest fears, though, that workers and retirees have is the possibility of running out of money in retirement and having to subsist solely on Social Security, right? That's why housing wealth should be considered with other financial assets when developing a comprehensive retirement plan. One of the biggest opportunities we have in our space is to partner with financial advisors who are now figuring out that housing wealth needs to be part of an overall comprehensive plan. So one of the things that we do and talk to are financial advisors, and we do presentations for them as well, right? Again, if we're talking about seniors and their situation, the NCOA, which is the National Council on Aging, posted this, and this was before the pandemic, right? Over 25 million Americans age 60 plus are economically insecure. What does that mean? They're living at or below the federal poverty level. These older adults are struggling with rising housing costs, healthcare bills, inadequate nutrition, lack of access to transportation, diminished savings, etc. Right? And now we're in hyperinflation. So we've got gas prices, medicines, everything has gone up, right? So this is only exacerbated post-pandemic. For older adults who are above the poverty line, one major adverse life event can change today's reality into tomorrow's troubles, right? We all are aware that we're one medical event away from having financial disaster, especially with seniors that are living at or below this level, right? So they're sitting on, it seems to me, as I look at it, it seems to be a great disconnect right? They're sitting on $10 trillion in housing equity, and yet they're living at or below the poverty line. So there needs to be a way that we can kind of connect those dots and maybe make life a little bit more comfortable. Today, we want to talk about aging in place, right? Why aging in place? Well, according to some research that I did prior to today's presentation, the AARP website says that 77% of Americans, seniors, wish to live at home. I think we all recognize that and realize that that's probably a very true statement. According to senior.living, right? In-home healthcare, and that's really what we're talking about today, provides really three main conveniences. Not that assisted living and nursing home care doesn't also provide these, but we're talking strictly about in-home care today. So, the fact that there's safety, right? Aging in place is a safe option, right? It may take some effort, like installing the medical alert system, putting in the wheelchair accessible doors and ramps, maybe putting in the stair lifts, right? But at the end of the day, there's safety in aging in place. Convenience, no one has to sell, no one has to move, right? They don't have to break their routine. The loved one gets to sleep in their own bed at night, right? There's familiarity. I like what they said, no rules to follow, right? No pets or no smoking, right? And lastly, quality of life, right? You feel better, you're happier, you're less stressed, right? When mama is able to stay at home, mama is happy. What do they say? When mama's not happy, nobody's happy, right? It's familiar surroundings, copes with illness better. I thought this was interesting that 50%, that Alzheimer and dementia patients take nearly 50% less trips to the doctor, right? When they're living at home, right? So how do we make that happen, right? The majority of in-home care is private pay. Obviously, you guys have learned recently about long-term care and long-term care policies. That's a great asset and way to afford or pay for these types of things. But what happens when the savings runs out, right? Do we sell and move into assisted living? Do we move in with the kids? Most kids are like, no way. Most parents are like, no way, right? So what alternative funding sources do we have for in-home care, right? And hopefully today we're going to talk about that. How can a reverse mortgage be utilized to pay for in-home care? How can a reverse mortgage be used to make those required renovations in order to age in place, right? We want to talk about both of those as we move into this. So what is a reverse mortgage, right? Everybody has an idea. Everybody has an opinion. Everybody has heard some sort of horror story about reverse mortgages and how they're bad. And I spend 90% of my time just debunking the myths. So I always like to start off by saying reverse mortgages have been around, believe it or not, since 1962. Now, they were not reined in and brought in under the oversight of HUD, the Department of Housing and Urban Development, until 1989. It's one of the last things that President Ronald Reagan did as he was leaving office, is he signed a bill that brought reverse mortgages in under the oversight of HUD. So since 1989, this has been a product that has been overseen by, regulated by HUD, the Department of Housing and Urban Development. It's a loan that is sponsored for homeowners that are 62 years of age or older. So there is an age requirement. If you're not 62, you just don't qualify yet, but as soon as you get there, you will. If you were to go to the HUD website and Google reverse mortgages, you would see an acronym HECM. HECM is what we call it. It stands for Home Equity Conversion Mortgage. That's what HUD calls it. In layman's terms, we all call it the reverse mortgage, but it's one and the same. It's what we're talking about. So when we hear the word HECM, we're talking about reverse mortgages. So what is a reverse mortgage? At the end of the day, it's just a mortgage. What does that mean? So a mortgage is where I go to the bank, I go to the mortgage company, I go to the lender, and I ask or I apply to borrow money, and I pledge the house as collateral, right? The house becomes collateral for the loan. And so in lieu of that collateral, the lender lends me money. They place a lien against my title. I still own the house, but I now have a lien. That lien stays in place until I either sell the property or refinance the property. I just can't do anything until I pay that lien off, right? They don't, when that money gets paid back, that's when they release the lien. And at the end of the day, that's all we're doing with a reverse mortgage. We're borrowing money from a lender. We're pledging the house as collateral. The lender places a lien against the property, a lien that doesn't get released until the loan gets paid back. What's great about reverse mortgages is that with a traditional loan, I'm borrowing the money. I'm also having to negotiate the rate, the payment, the terms, how much for how long, et cetera, et cetera. With a reverse mortgage, I like to tell everybody, we're now payment optional. This loan is structured so that you can borrow the money, use the money, do all the things without having to obligate yourself to a mandatory repayment plan. So it becomes very budget friendly, right? At the end of the day, we're working with clients who are typically living on fixed income, fixed resources. Again, like we were saying earlier, they're struggling with inflation and rising costs, medicines, et cetera. We don't want to add one more thing to the budget. By not having a payment, by not having to commit to a mandatory repayment plan, our client now has greater authority on how their income resources are spent on a monthly basis, right? So at the end of the day, I'm really just setting up a line of credit. So once we figure out how much of a line of credit they have, then the question becomes, how do we use it, right? And what are my options? And so there are several different disbursement options. You can take a lump sum of cash. You can leave it in the line of credit and draw upon that line of credit on an as needed basis as often as you want to. And then the last plan or option is that we can actually convert a portion or all of that payment of that line of credit into a payment plan, whereby we're auto depositing into the client's account a specific amount of money on the first of every month. The proceeds from a reverse mortgage are not considered income. I always try to emphasize that. It's not considered income, therefore it's not taxable, it's not reportable to the IRS. What is the borrower's responsibility with this loan? Obviously, they're not having to make mortgage payments, right? But they still have to maintain their property and pay their taxes and insurance throughout the life of the loan, right? Pay your taxes, pay your insurance, enjoy the property, and let us know when you're no longer there, right? So how does this work in a practical application? I did a loan for Bob and Sarah. They're actually real clients of mine. That's their actual ages. They actually do live in McCullough. And they had a home that was worth $400,000. Now, Sarah needed 3 to 5 hours of in-home care every day, right? So that Bob could get a break. We know that, right? They qualified based on their ages for about a $200,000 line of credit on a $400,000 house. What we did is, again, they have disbursement options, lump sum, line of credit, or a payment plan, or any combination of all of the above. They decided $3,500 a month for 5 years. We did a payment plan, right? So we converted that $200,000 line of credit into $3,500 a month on the first of every month for the next 5 years or 60 months, however you want to break it down. Somebody grab a calculator real quick and take 3,500 and multiply it times 60 payments. Tell me what you get. What'd you come up with, Sean?
$210,000.
Okay. We had a $200,000 line of credit, but because we set it up on a payment plan, we were able to extrapolate to an additional $10,000 of proceeds out of that line of credit. How do you make $210,000 out of a $200,000 line of credit? The short answer is this product, this line of credit has a growth factor to it. It's growing while the customer has not drawn those funds. The undrawn funds are continuing to grow. That credit limit is continuing to expand for as long as there is credit available. And so when we set it up on a payment plan, we can actually squeeze more juice out of the line of credit than was actually available the day they closed. It's a really cool feature that no other mortgage product has in the market. I love payment plans for stuff like this, but in this case, $3,500 a month paid for some in-home care for Sarah. And so Bob didn't have to deplete retirement accounts, IRAs, other assets in order to take care of his wife, right? I revised the scenario a little bit and said, well, what if they needed the renovations, right, in order for her to get the in-home care? What if they had to put in the wheelchair accessible doors or the safety step tub or the stair lift, right? What if we had a major alteration or renovation that needed to be applied first in order to make this in-home care situation work, right? And so the example we used is, okay, they took $20,000 to make those renovations. How does that alter that $3,500 payment plan? And we could do it one of two ways. We could take the $20,000 cash and we could lower the monthly payout to $3,000 a month for the next 5 years. Or if we had to keep it at $3,500, we could certainly do that, but it would last for 4 years and 3 months instead of 5 full years. So again, we can alter this plan. We can turn payment plans on. We can turn payment plans off. We can take lump sums of cash. The great thing about having a line of credit is it's flexible, right? And we don't have to have everything set in stone when we close the loan. So what are the benefits of a reverse mortgage for our borrowers, our clients? Well, first of all, I always like to emphasize there's no credit score requirement. If any of you have any familiarity with borrowing money, it's always about what is my credit score, because that determines my interest rate, right? And in our case, there's no credit score requirements. Do we look at their credit? Yes, absolutely. We want to make sure that for the most part, everything's being paid as agreed. But it doesn't matter if you've got that 800 credit score, that's nice, or if you've got a 500 credit score, we're going to be able to help you. There are very low income requirements. Again, I'm not having to qualify you with a mortgage payment. I just have to make sure that you've got enough income to cover the rest of life, right? Taxes, insurance, basic utilities, any other debt that you've got showing up on your credit report. Do you have enough income coming in to basically cover those other things? If you do, you get approved, right? I like to emphasize again, this is a payment optional loan, meaning no mortgage payments for the duration of their time in the property. I like to use the word payment optional because we've got folks who've been working for the last 40 and 50 years, paying their bills every month on time, and they can't wrap their head around not having to make a mortgage payment, right? So you know what? I say you're payment optional. If it just makes you sleep better at night to pay a payment, you can pay a payment. But guess what? You get to determine how much and how often you make that payment. And for some folks, they just know that, gosh, I can pay the interest every month, or I can pay the interest once a year. And that just helps keep this loan from growing too much. Other folks are like, okay, I'll never make another mortgage payment, but I know that I can make that if I want to. It's totally up to me, right? Again, their only requirement is to maintain the property along with the payment of taxes and insurance. And I get this question a lot. What does it mean to maintain the property? Is somebody going to come check on me? Or is HUD sending an inspector? The answer is no. Maintaining a property means if it needs a roof, put a roof on it, right? If it needs painting, paint it. It's the things that we do to, as homeowners, to take care of the property and not let it fall down around us, right? In Bob and Sarah's situation, they utilized their home equity to pay for her care, like I said, without having to tap into or deplete other assets or incur additional tax liability. What most people don't think about all too often is when I take those withdrawals from those IRAs, at the end of the year, I have to pay taxes on what I drew out, right? So again, this allows us to utilize a resource in a tax-free manner. And at the end of the day, they still maintain liquidity. They still have retirement accounts that are growing for when life happens. And again, we're in the fourth quarter of life when we're talking about these types of clients. Life's going to happen, right? When's the loan come due? I get that question all the time, right? Does the bank get the house? That's the number one question we get, right? The deed and the title remains in the client's name throughout the life of the loan. It transfers to their estate upon death, right? The bank or the lender, the mortgage company, does not take ownership of the house. All that the bank or the lender has is a lien against the title. They will not release that lien until the mortgage gets paid back, right? So when the loan then becomes due or payable, when the last surviving spouse or borrower no longer occupies the property as their primary residence. At this point, I say death or nursing home, right? It's whatever event that occurs that causes this to now no longer be home. That's when the loan becomes due and payable. That is usually when the house transfers into their estate. And so then their heirs, their estate has up to 6 months with an additional 2 90-day extensions, total of 1 year, to satisfy that outstanding mortgage balance. The lender wants to know, are you planning on keeping this property? If so, how are you going to pay off this note? Are you planning on selling this property? If so, let's get a realtor and let's get a copy of that listing agreement and let's get it on the market, right? And if or when the property is sold, the heirs receive 100% of the proceeds above payoff. Bob and Sarah had a $400,000 house. We only set up a $200,000 line of credit. Even if they used all of that line of credit, they're going to have somewhere north of $200,000 on their balance. When their heirs go to sell that property, they'll sell it for whatever market value is and pay off that $200,000+ balance, and they get to keep 100% of the proceeds that are left over. So one of the questions, or one of the objections that we get is that I want to leave the house to my kids. Guess what? You can still leave the house to your kids and they can still benefit from the proceeds that are left over once you're gone, right? Next question people ask me, especially when I'm talking to groups like this, is, who's a candidate? At this point, after studying this program and working in this product for the last 12 years, I feel like anybody who's 62 years of age or older, who is either considering retiring, about to go into retirement, already in retirement, needs to sit down and have an adequate understanding of how this program works, right? Especially folks that are struggling on fixed income or need additional income, that have insufficient retirement accounts, still making mortgage payment. Believe it or not, folks, about 70% of the loans that we do are folks who still have mortgage payments, right? The biggest thing that we can do is eliminate a mortgage payment and free up additional cash flow in their monthly budget, right? I get a lot of calls from folks that are recently widowed or divorced, right? Again, we've now gone from a situation where we had 2 checks to maybe just 1. I highlighted it because it's what we're talking about today, in-home healthcare, right? And renovations, other mortgage debt, folks looking to downsize, right size, or otherwise move into properties. There's a component of this product that we can talk to realtors about that they can sell. It's called reverse for purchase. A senior can actually use this product to purchase a new home or a better home. The list goes on and on and on, right? So we've got lots of opportunities to talk to lots of people and educate them on this product. When I'm out talking to folks and I'm looking for referral partners and sources, who am I looking for? The list goes on and on. I've highlighted, in-home healthcare companies. Thank you, Sean, for having me here today. Home improvement companies, especially those that specialize or cater to the senior community aging in place, that do the renovations, the stair lifts, the chair lifts, the safety step tubs, the wheelchair accessible ramps, doors, etc. Financial advisors, obviously, we want to make sure that this is part of an overall financial package. Realtors and builders, elder law attorneys. I think you've had an elder law attorney here recently. Again, great resource. Insurance agents, especially those that do the long-term care, right? Again, the list goes on and on and on. Those are folks that have contact with senior clients, again, that we want to make sure that we can educate them and be a resource for them.
And David, we've got a question.
Yes.
Excuse me, which is, does a reverse mortgage affect someone being eligible for institutional Medicaid if they have to go into a nursing home?
Right. Great question. So if they have to go into the nursing home, right, then typically that means that this is no longer home, right? If they have vacated the property that has the reverse mortgage on it, and there's no spouse behind, then typically the heirs are going to sell that house, pay off that mortgage, and then whatever money is left over after the mortgage has been paid off typically goes to pay the nursing home bill until such time as Medicaid can kick in, right? Medicaid, and I don't know the ins and outs of all that, but I understand that for most part, all of the other assets and resources have to pretty much be depleted, right? So if a client does move into a nursing home, typically that triggers the maturity of this loan. They're going to be selling that property, paying that loan off. And if there's any proceeds left over, that will go to pay the bill until Medicaid kicks in. If they are moving into the nursing home and there's a spouse staying in the home, that property has a mortgage against it, right? So it kind of insulates the property somewhat to prevent the nursing home from wanting to place a lien against that. They're not going to want to do that unless they want to pay that lien off first. But at the end of the day, even that situation doesn't disqualify somebody for Medicaid. I hope that covers it.
Do you ever have, because I know you said you work with elder care attorneys, do you ever have them set up the proceeds of the reverse mortgage or the monthly income from the reverse mortgage into something like an income trust or some sort of trust product that allows them to then apply for Medicaid?
Yeah, absolutely.
After 5 years?
Yeah, absolutely. We do. A lot of clients have trusts already set up. We can do the property in a trust. Well, the only requirement we have during the underwriting of the loan is to review the trust document to make sure that there's no language that prevents our ability to make the loan. But we do a lot of loans inside of a family trust. And then that means that proceeds then are inside of the family trust as well to insulate as well.
Okay. And then the other thing that struck me is you said something about seniors being able to use a reverse mortgage product to actually purchase a home.
Yeah. So you think about my clients, Bob and Sarah, right? They had a $400,000 house that was paid for. And let's just assume that for this example, it was a 2-story house and Sarah was now having problems getting up and down the stairs, right? They really needed to find her something that was a 1 level that maybe had a smaller yard. So they could sell that house. They're going to have $380,000 cash in hand after real estate fees, et cetera. And they have now the option to either A, try to go find something they can pay cash for in the 380 price range or less. B, look at traditional mortgage financing, right? And at 70 years old, a 30-year fix means it's going to pay out when he's 100, right? Or C, Bob and Sarah still qualify for basically 50% of the purchase price based on their age. If they were able to go out and find let's just say a $500,000 garden home in a gated senior community, we could give them a $250,000 loan on the new property. They're bringing $250,000 cash to closing. They financed the purchase of the new home with a reverse mortgage. They only had to infuse $250,000 cash into the property, which means they'll never have to put, in theory, right? They'll never have to put another dime into that property. They just bought a $500,000 house for $250,000 cash investment. And they still have money in the bank, right? They didn't deplete all of their assets from the sale of the previous property. So now they've got cash sitting in checking and savings. So when life happens, they're liquid, right? And so that's a great opportunity to get somebody out of a home that doesn't suit where they're at today's needs, right? It might have been a great home to raise the kids in and the grandkids and put them through college, et cetera. But now we need something smaller. We need something, maybe it's a 1 level. We need something with maybe nice, newer appliances and amenities because we can't do the maintenance anymore, those types of things. And so reverse for purchase is a phenomenal way to allow seniors to, like I said, downsize, right size, or otherwise get into housing that suits today's life, today's needs.
They would need to have equity. They'd need to bring equity to the deal. So it wouldn't be someone who, obviously didn't own a home or
right.
Right. I got
it's typically somebody who's got lots of equity in the other home. They're selling that home and moving into this one. And so the cash to close is usually coming from the sale of the previous property to meet that down payment requirement. But the math is still the same. We plug in their date of birth, we plug in the purchase price, the HUD computer tells us how much of a loan they'll get. The difference then becomes their down payment.
So why wouldn't everyone do that if they wanted to buy a, downsize or right size of 1 story? I mean, it seems to me like that in your example, if I understand it, you're essentially laying out about half of the cost, and everything else, I guess you're bringing in equity or through the loan.
Yeah, it's a phenomenal product for our senior clients. And the short answer is there's just not enough of me to go around. I'm out there preaching this song and dance to our realtors and builders and letting them know that, hey, there's another option. There's another way. If you're looking to grow your real estate business this next year, here's a demographic that gets marketed to by everything under the sun except for their housing needs. And even the realtors that do the senior real estate designation are typically dealing with seniors as they transition from home into nursing home more than they're trying to utilize a product like this. So it's just about bringing education and awareness, and we want to talk to anybody and everybody we can.
It is so cool. And just, I know we stay in touch, but I may be needing to do this for my mother at some point, who's 85.
Yeah,
and is
absolutely.
In a home. Here, Martha Harris has a question, which is, I'm sorry, just lost it. Where do we go to have the reverse mortgage done?
Where do we go to have the reverse mortgage done? So locally, obviously a guy like me, we would love to meet, sit down, talk with your family, your loved ones, your clients, and educate them on this product. And then, like I said, because I'm licensed in 41 states, I'm actually doing these all over the country. And we do a lot of it over the phone, through email, through FedEx. And we certainly can take care of those client members, even if they're outside of the state of Alabama. I
So
think there's
really,
another
the
question.
answer is they can come to you.
Yeah, absolutely. Absolutely.
And then our friend Jerry Johns has a question. Are there any measures in place that help ensure the borrower is not being financially exploited with the loan? Or what if the person has noticeable mental deficits?
Great question. I appreciate Jerry bringing that up. So one of the great things about having HUD oversight is that I will meet with a client, I will educate them, we'll talk about all the things that we've talked about today. And then if they say yes, I have to say, but wait, you have to go through a HUD mandated counseling session. HUD wants to make sure that I'm not exploiting the client, that I'm not taking advantage. Elder abuse is a dirty word in our industry, right? Nobody wants to be accused of that. So there is a mandatory HUD counseling session that is required before we go to application, where the client actually talks with a HUD approved counselor to educate them on all the things. And then at the end of that session, they'll get a certificate that says they're eligible to start the process. We deal with a lot of folks who do have dementia, Alzheimer's, and those types of things are common with a demographic in this age group, right? And so we deal with a lot of adults, children who have powers of attorney. And obviously we will make sure that we can validate that power of attorney, that the client was of sound mind when they signed that document. We'll get a doctor's letter that indicates what their diagnosis is and when it became chronic. Because at the end of the day, we want to make sure we've got a valid power of attorney if we're having an adult child or someone else take these steps on our client's behalf. So lots of oversight, lots of safety nets built into the product to make sure that our clients are getting taken care of.
And Dorothy has a question. Can a reversed mortgage be done on a state property where seniors still live in the home? I think that's that's sort of where you've been going, right?
Yeah.
So the point in David's mind, the point I believe was that you in order to stay in the home, you do the reverse mortgage.
Yeah, it's got to be it's got to be the residence that they're actually living in, right? Their primary residence. We can't do second homes. We can't do investment property because of the way this loan's structured with no payments. It has to be the residence that they live in for the majority of the year. And the definition for the majority of the year is 6 months and 1 day. So we've got folks that will snowbird in Florida or travel to Arizona and then they come back home. And so, as long as it's where they're living the majority of the year, then that's fine. Great questions. I'm going to do a quick wrap up and then I'll turn it back over to you, Sean. So as we've seen, reverse mortgages can be a great resource for senior homeowners to utilize their equity in a tax-free manner. It can provide a resource, right, to pay for in-home care and or renovations that are required to age in place, right? Budget friendly, as the loan is structured in a payment optional manner. And lastly, and I think this is the most important thing, it maintains dignity by allowing the senior client more control, flexibility over their financial resources, making the last years the best years, right? That's the point. That's what we try to do. Quite frankly, seniors, when they start getting into this season, right, they start having their choices and their options taken from them. And so I love the fact that this product allows them to have some control and some flexibility over their financial resources. So again, I appreciate the opportunity to have done that, been here today. Who are you going to call, right? Ghostbusters, right? There's my contact information. There's my little logo. I had a friend who created that my website, thereversemortgageguru.com. My tagline, converting equity into cash flow, right? With that, Sean, I'm going to turn it back over to you.
Yeah, thank you so much, David. I'm so pleased that we've stayed in touch through the years, and I'm so grateful to you today for giving your time to not only me, but 65 other people, and we appreciate it. Our code word for today, our password, which is for our survey. And again, if you're new, and I know most of you are not, but if you're new, we have to do a survey in order to provide your social work or nursing certificate hour. In order for us to do so, we need your email and we need you to complete an evaluation. That evaluation is at Survey Monkey and it's password protected. And the password today is HECM, which is a home equity conversion mortgage. It's the acronym for home equity conversion mortgage or reverse mortgage. HECM is today's code word, HECM, and that's all capital letters, all capital letters, HECM, HECM, home equity conversion mortgage. So we thank you, David, for making us aware of this. I'm so excited to learn about the ability to purchase a home using equity in a reverse mortgage. Really exciting stuff for me personally. I can use that information in my own life. I hope that what we've presented this week and all month has enriched your personal and professional lives, made a difference in your practice or in your family. We'll be taking a little time off. Our next presentation will be on the 10th of May, which will be dealing with a dementia diagnosis. And then in June, we'll have entirely ethics all month for each presentation. So I will send out a May calendar when I send out our certificates this evening. And again, I'll send out so many blast emails, you'll tire of them, but you'll have our schedule. We'll take 14 days off from today. We'll be back on the 10th of May. We so much look forward to the chance to present new information to you and learn ourselves. And again, I thank y'all for being here today, and not just for today, but for everything that you do every day. But I do, now that it occurs to me, I do want to correct something, David, and with all due respect, I'm not an in-home healthcare company. I'm a referral agency, a placement agent. And what I do is refer in-home care or assisted living or nursing home or adult day or, whatever is appropriate and needed for the family at that moment. And we're more of a broker. So we don't touch patients directly. We simply touch their families, guide their families, empower their families, educate their families. And we do all this at no charge, just sort of like a realtor would. So if we sell a home, so to speak, we are paid. And if we don't, we don't. So that's who we are and how we work. And I appreciate you, David, for supporting us through the years. And actually, I know David long enough that the last time I saw him, he had a full head of hair. It was black, as I recall.
That's right.
It was black and full head of hair. So he's been in the business a long time, certainly as an empathetic person, cares about what he does and who he does it with, as do all of you, and as do I. We'll take a little time now just to say goodbye. So we're a little early, but I appreciate you being here. Again, the password is HECM, and don't expect to get your certificate today because I'm leaving town right now, but you'll get it in the morning. Or you can always email me, sbarnes@carepatrol.com, or text me 205-482-8759 if you have a question about our CEUs or if you have a referral. We thank you all and have a great rest of your day. Thank you, David. We appreciate you.